Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice.
G'day and welcome to the latest episode of Vantage Point, where we aim to get behind the leading minds who are driving success in the Australian market. And today I sit down with Paul Sharbanee, co-founder of fund manager Investius. Investius is an Australian equities fund management company with a particular interest in high-quality ASX microcap companies. And Paul talks about his approach to investment, how relationships are paramount, and knowing not only when to invest, but when to get out. We hope you enjoy. G'day, guys. Thank you very much for joining me today on the podcast. We've got Paul and Badri from Investius. And before I sort of go through the Investius fund and what it's all about, perhaps we get a bit more of your background in terms of how you came to investing, how long you've been involved in the game, before we get into specifics.
Well, thanks very much for having us, Simon. I started in 90, fresh out of university. Got a first job in a stockbroking firm at a time when people didn't think it was possible because we just had the 87 crash. Started at Saw James and then finished up working for a company called Ayers Reid, who used to specialise in gold stocks for a while, and then had a bit of a hiatus and then set up a company called CPS Capital with a guy called Tony Cunningham, who's recently departed, and also Jason Peterson. And that went well for a few years. And then in 2017, I left there to set up Taurus. And through the journey of Taurus, early on met Badri.
Yep.
Badri was involved in a company, ICT, and we found we were very like-minded, both have pretty analytical sides to us in looking at stocks. Both are interested in meeting people, interested in what's happening with stocks. And Badri decided to join up. And we also saw that through Badri trying to promote his stock to various funds and finding how difficult it was to get them to actually even take a meeting, or they weren't nimble enough to invest. It's long been a vision of mine and a dream of mine to set up a fund, and it was also very much Badri's dream as well. And so we came together and decided to go for it.
That's certainly a gap in the market, I think, in terms of funds, particularly in the micro end that can actually invest, sort of sub 50, sub 100 million. It's a bit of a void out there until the investment landscape opens up. But just talk to us in terms of Investius. What's the sort of mandate? What's the sort of, do you invest in just resources, just biotech, just tech? Is it the whole market? Is it, a specific size in terms of market cap that you target? What's the sort of like?
Okay, so basically it's a model that we've come up with, which has been over a few years building. We're totally agnostic with stocks.
Yep.
We generally prefer smaller stocks, but we can invest in bigger stocks if we want to.
So it's a wide-ranging mandate. It's no sort
Totally
of cap.
wide-ranging,
Yep.
but it has to be listed and it has to be in Australia, or it has to have a clear pathway to listing.
Yep.
We don't want to be caught in something that's not going to list. And also we found it extremely difficult to have clearing available in US stocks or TSX or wherever else it is, being questioned whether it's scalable or not. And there's plenty of places to put the money. But we like to, rather than just taking a recommendation from someone, we like to really try and get under the hood, meet the company and make sure that they tick 3 boxes. They're pretty simple boxes, but we look at, first of all, they have to have an amazing business or project that's got significant blue sky that can be promoted really well, that we think's got a really good future. The second thing is there has to be good management and good people who are running the company. And part of that, there's a lot more to it than just having quality people. You want them to be aligned, you want them to have skin in the game, you want them to be co-investing with you, want the same thing that other shareholders want. And at the same time, you want them to be relatively intuitive themselves in running the company, but also not afraid to say, hey, look, we need some help. We've got a problem with this, that, or the other, whatever it is. And we might be able to sit down with them and spitball through that problem and say, look, if you need another $2 million or something to make this work, that's not a problem. We can easily raise it for you because we've got both sides, or we'll cornerstone it with an investment. We're happy to put more money in because we like the vision. And then finally, obviously the third criteria is a value proposition investment. And that's particularly within that 5 to 20 million market cap size, like the small cap size. We find that people think it's a lot riskier down that end, but we find it a lot safer because when you've got a valuation, it's very easy to value every single piece of that business at the lower end, whereas at the higher end, if you're in something that's capped at $1 billion or 700 million, if there's a fallout, like you'd look at the moment at lots of lithium companies that got to 700 million, $1 billion market cap, and now they're down to 70, 80 million in market caps. What do? How do you recover from there?
It's a long way back, that's for sure.
It's a very long way back. Whereas if we raise money for a company capped at $5-10 million and something goes wrong, we'll raise them more money capped again at $4 million and find a new deal, or we can help them in that vision or try and improve on what they did before, so long as we're like-minded and we get along well with them.
So it sounds like it's a pretty strong relationship-based game as well for you in terms of the companies that you invest in.
Very much so. Yep. I think we have to get on with them and we have to be like-minded in what we're trying to achieve. There was recently one company that we went to visit. They were capped at 40 million, but they had net profit. They were on target to achieve 20 million for the year. And we looked at it and thought, wow, this is just incredible.
Something needs to be, something doesn't add up there.
Yeah, it has to go up. But it was all true. But when we sat down with management, they were just patting themselves on the back and saying they bought their shares at, a tenth of the current price and they couldn't wait to sell, and what a good job we've done.
Yeah.
We called them back to talk about investing and how we'd invest and could we get a line of stock off someone. They never returned a single phone call, and all they did was just pat themselves on the back. They've since gone down and they're still earning that amount of money, but people, I guess, are waiting for it to fall over, or they're not really aligned in their interests and shareholders' interests.
No, that makes sense. And so when you talk about the sort of value proposition, how do you sort of look at an investment? How much work do you do? Particularly where there's sort of a model that you can build out in terms of a company that's real. How much of it's based off valuation, and how much of it's the sort of promotion side that you can this is sort of undercovered and it's 5 or 10 million market cap that can easily double, sort of thing. How do you sort of look at that?
Yeah, from a variety of sources. Obviously, you've got brokers who promote different things and say, oh, look, we're thinking of doing this raising for it. We've got our own corporate clients, and from the broking side, which was Taurus Capital, and that actually is quite synergistic with Investius because we'll often get opportunities that we can go into, and we only do a deal where we really want to invest our own money, the fund's money, and we are truly aligned. The thing is that we'll often be caught first by the project. And what's it like? Are there really good results? There was a copper project recently in Chile that's had amazing results that we really like the sound of. Copper's a pretty funky metal. There's a stock we've got in the fund called Kaiser, which is a gold stock. They're up and producing at the moment. They've had a few problems with the level of production, but they're unlocking another level of the mine. They're going down deeper, and we've helped to get someone in to fund that, and we'll look at funding them in the future. Hopefully they can get gold production up and really good. So that's a really exciting story because it's in the gold space. It's producing rather than just saying, hey, we found another
explorer. Sinking more money into the ground.
Where they just continually are drilling to get to, well over 1 million ounces. And lots of people can make money by producing. So if these guys get it right, we were attracted to the production story. We spoke to management who seemed like pretty good guys to get along with. And then we found it out to be a value proposition. So if they can be, they're only capped now close to 30 million. And if they could somehow do some sort of a good deal where they can start producing and making 10, 20 million a year.
It's not going to be 30 million for much longer.
That's it. And that's what we're hoping for. And that's how we like to do it. So they come from a range of, we've got 6 to 10 stocks to look at a week. And from there, we might pick one every 2 weeks that we really like the sound of.
And so when we sort of step back and look at the portfolio, how many positions is made up in the portfolio?
I think we've got somewhere between 10 and 20.
10 and 20,
it goes down as low as 10 and it might get
So
up
it's
as high
reasonably
as
concentrated,
18.
right? So it's not like you've got 40 to 50 to 100 positions. It's things that you can manage and have clear oversight, quite easily.
100%. And I think one of our great pros, I guess, is being very nimble. There's two of us there. We generally talk things through, agree with it. We're both quite analytical, very quick with maths and, working out if it's a value proposition and then seeing do we like it or not. But it also makes the fund a bit more nimble to not have layers of analysts who tend to go through things. Yeah, we're quite attracted to a couple of small, one's a biotech stock, which we've been in for a long, long time, called EcoIQ, which has a new diagnostic for heart disease. And it's found that by using AI, they can diagnose various heart diseases, one in particular called aortic stenosis, that they can diagnose with more efficiency than a cardiologist. They've proved it through a set of trials, and they're currently hoping to get FDA shortly. We've been in them for quite a while.
So what's the market cap of that?
It's about 120 million at the moment, and they just completed a raising of $7 million to shore up their cash position at 15 cents, which we took part in. And we're helping the company in getting a few institutions on board. That's gone really well. It was led by Ords. And they did very good job on it. And now it's now
big enough as well to attract the next level of investor, right? In terms of
that's what we're hoping to. But I think with FDA and post-FDA, there should be good commercialisation development. And that's when people will really start taking notice.
And so if we step back and have a look at when you first invested in EcoIQ, when was that? And at what price?
It was one of our foundation investments at 10 cents a share.
Okay. So when was that?
Probably 15 months ago.
Because you've been on the journey for a little while now. Now it's because it's had a reasonably good performance of late, hasn't it?
Yeah, it's now up to 23, so we're up 100 and something % on it, which is quite good for performance. But we will always look to, when we invest in a company, we generally look to exit. We think of our exit as we invest, before we invest even. So we want to know what it's going to be. Now, we knew with this one it was going to take a fair bit of time. We had to get FDA and we had to get earnings coming through. And upon the earnings coming through, we expect a significant re-rate. And during that time, hopefully, we'll get volume. And when volume comes in, then we expect to exit.
And so how hard is it to not fall in love with a stock, that you get so attached to it? How do you stay sort of rational, whereby, you talk about, if EcoIQ, runs really hard ahead of, before FDA approval, before commercialisation, how do you find it hard to not, to hold on or?
No, I think once it's okay to be a slow learner. And a lot of us are slow learners. I was a bit of a slow learner, but it's not okay to be a no learner. And I guess through having experience, you've got people who are out day one and they're first out for their one pip. And they don't make real money. And there are people who invest in something and take a longer term position, but eventually you have to exit. And sometimes we don't sell because we want to sell. We sell because we have to sell, because when the volume's available and when everyone's screaming into it, you have to take advantage of it and sell some. But by the same token, we don't want to sell our stock and have it immediately fall back down again. We want to sell our stock and leave plenty of upside for other people so that they make more money. And we want the stock to be a roaring success. We hope it goes to, it's 23 cents. We might sell at 50, 60 cents. We hope it goes to $2 a share. So the people who buy the stock off us continue to have a good experience, and they're there to buy the next one off us.
And I suppose it's always the sort of old adage of it's better owning less than something that's worth more than something that's worth less, right?
100%. And the other thing is we don't cry over spilt milk. When we make a decision to sell it, we're happy with our performance. There's 100 different ways of saying you never go broke making a profit and all these sorts of things, but most people tend to automatically do what they want to do very readily and procrastinate about that which they don't want to do. For example, when Mum bought you home the chocolate biscuit when you were 15, you'd wolf it down and she said, go do your homework. You're like, hold on, I've just got to finish watching Hogan's Heroes. So it's the same in the stock market, that when we're up on a stock, most people go, oh, I bought that at 10, they're 12. I bought 100,000 shares at 10. I put my 10 grand in. It's worth 12 grand. I've made 2 grand. Beautiful. I'm gone. That's whatever it is. I've made my 2 grand. How great that is. And when they're losing, they tend to go, oh, I'm in at 10. I was hoping something was going to happen. It's 9, it's 8, it's 7.
Hold on to the losers.
Correct.
Yeah.
And what you have to do is try and reverse that natural human psychology and try and let your winners ride more, or keep averaging up and buying more on the way up, and tend to cut your losers a bit quicker. If we can't work with the people, or they say, look, you're not really a right fit for us, or no, I want to give myself a raise, and we're like, well, hold on, you're being paid $300,000-$400,000 a year. It's quite a good wage. You've had a bad year. It's better for all shareholders if you give yourself a raise on really good news and performance to be aligned. And if we don't align, so be it. We just cut the position.
No, that makes sense. And when we look at maybe not just in Investius, but sort of your broader career, what's been probably your best investment and worst investment?
It's
a good question.
Best investment was probably, I was with a very great man called Adam Rankin Wilson. I got the pleasure to work a little bit with him.
Yeah.
Another one of your guests, actually, I remember the day he came in and met him. Mr. Chris Judd came in and met Adam. And Adam had a lot of great things to say, and was a very, very smart man. And he put together a company called Sundance, which we were lucky enough to do one of the first raisings in, 100 million shares at 2 cents, to raise them $2 million very early. And I think it peaked at 80 cents, 86 cents. And we did very well out of that one. And the worst investments were when I don't want to out people here because they've told lies and terrible things, but I was in one of the few stocks that ever got delisted in my life. Was a company that was trying to sort of take the place of the internet, and it was going head to head with the internet in that you'd be able to have newspapers land on your screen miraculously instead of having to buy it.
Sounds like magic.
And it was in 1996, 97, and it was probably just the wrong time, and it all went up in a heap with the tech boom of 2000. So I guess I learned a lot then.
Just the old vaporware.
Yeah, if I'd known what I know now, I never would have been in it, just purely because of the market cap and the structure, and I would have asked some questions about earnings. And
there's different time back then in terms of everything was flying, and it's all a great story, right?
Yeah, I mean, nothing goes up. That's the other thing that you have to bear in mind when you talk about when you actually cut it. I mean, there's only one CSL.
Yeah.
And they went down last year as well, but there's only one CSL. Even Minres, who were infallible, were up at $100 a share, and now back to a quarter of that.
Yeah.
So everyone has their time in the sun, but I don't think you can ever... I've heard too many stories about people who say, look, I bought it at 2 and it ran to 20 and I didn't sell them, and then it fell back to 3 and I bought more, and then it ran again to 15 and I didn't sell them, and then it fell to 4 and I bought them again, and then it went to 20 and I didn't sell them again. Now they're back at 2. When am I ever going to catch a break?
Yeah, poor me.
And I'm like, listening to yourself, you've got to realise what an idiot you sound like, because you've had 3 breaks and you didn't take advantage of any of them.
That's all. It's all about timing at the end of the day as well, right?
It is, but the market is totally greed versus fear. You've got the two conflicting emotions, and when it starts running well, you've got to really contain that greed, and stick to your guns and look: is it still a value prospect at these levels, or isn't it? Or maybe someone better than you can take it further forward. And by the same token, the fear when the Dow's down 1,000 points or whatever it is, and everyone's saying, "Oh, this market crashed today."
The front page of the AFRs, the market wipes 100 billion, etc.
All of those sort of things.
It's certainly fear. And then I suppose a question just in terms of your views on sort of small micro commentators, whether it's funds or analysts or journalists have been saying probably for the last 18 months, 2 years, it's never been more attractive. What's your view on the market in terms of the smaller end at the moment?
Well, yeah, it's very interesting. It's a bit like asking what's your view on the US market or other sorts of markets. We tend to be relatively agnostic to it and tend to worry about that which we can control.
Yeah.
So we can't control the US market. We don't know what's going to happen. You've got economists paid hundreds of thousands for Goldman Sachs and the likes to get it wrong. And they will continue to get it wrong, and sometimes they'll get it right, and then there's a China stimulus package or there's not. And these things don't matter. It's the same with what is the forecast for small cap stocks and what do you think of it? I don't think as a whole you can say small cap stocks, what's the outlook for it? I think there will continue to be pieces of garbage that are listed, that are in the small end, that are run like lifestyle companies, where it looks like management's just trying to rip the money at Gutser, and they're on insane wages, and they raise $4 or $5 million, and it's gone within 2-3 years, and no one knows what happens to money.
2-3 years would be doing well in this sort of companies.
If they legitimately had a go and failed, that's okay. I can live with things not working out. But if they did it just to nick the money, that's really uncool, and there should be probably bigger penalties in line for it. But because of this, and because of, I guess, the way broking's heading or the way investing's heading, and there aren't enough people who constantly look and search out opportunities and really put not only management to the test, but the whole value proposition to the test like we do, I think there'll always be opportunities, and it will always be pretty much happy days for us. So long as we tick our 3 boxes, I'm not afraid of anything, and I'm not worried when the money comes in or whether it doesn't come in.
And so when you look at the Investius, how do you why would someone put their money with you versus another fund? What's the edge or the point of difference? Is it because you've got the Taurus and the access in terms of being truly aligned from a corporate perspective, or is it that you're nimble enough to be able to move in terms of position size and whatnot, or is it the experience? What do you what's your view there?
I think there's a couple of reasons. I think the Taurus one is a very synergistic partnership, and it does help an enormous amount because we do get to source some fantastic deals, but we do get deals from other sources. I think if people look at performance alone, our performance was very good, about 29% year one. And the first 2 quarters of this year, we're now up over 15%. But that's what we were hoping for. And people, again, there's a few knockers out there, and people are waiting to see if it's sustainable with more money. But I'm fairly confident that we can keep going on this sort of trajectory. There's another thing that we try and put into it's on our business card at Taurus, where we look for results, confidentiality, and integrity. And I think they're the 3 things that the fund also stands for, that we're a results-based fund. We do get you very, very good returns. We handle all our people's business very confidentially, and we wouldn't disclose any of our clients or people who invest in the fund either. And the final thing is we deal with a great deal of integrity in terms of understanding the laws and also ethics and morals behind investing. I think that's one where I guess certainly a few directors of various companies, and there are other investors who don't necessarily do things by the book, and we try and very much stick within that.
And in terms of putting your money where your mouth is, are you guys significant investors in the fund?
Yeah, at the moment we're about 20%. And we tend to, as we grow, keep investing and keep those percentages up.
That's confidence and alignment, as you talked about, in terms of from management and of companies that you want to be invested in the fund, so that you're driven to perform for your investors as well. And in terms of how you sort of look at benchmarks or your fees, what does that sort of look like in terms of what's your target expectation? Obviously, past performance can't be a predictor of future, but how do you sort of look at that in terms of benchmarking?
The benchmark's the emerging market index, and we outperformed that significantly. As I said before, I'm very hopeful that we would be able to continue this performance. Certainly double-figure performance.
Yep.
year on year.
Yeah, very good.
And that's why, as you said before, that's why you have to take money off the table when you're up.
Yeah, exactly.
Significant numbers. If you're up 50, 100% on various stocks and volume allows you to get out of it.
You want to secure the performance for the investors, right?
Correct.
Without unnecessary risk.